Okay, so what went wrong with GameStop? How did the hedge funds escape? How on earth did they escape? More than 120% of the shares were shorted. How did the hedge funds escape? Okay, we're going to talk about that in this video. Okay, so what did the hedge funds do and how did they escape? Or did they escape? Let's have a look. Okay, so in this video, it's all about the hedge funds. What did they do? How badly were they hurt? And so on. Okay, so I'm going to focus on the hedge funds this time. So we'll have a quick look at where things currently stand. Oops, and then we'll talk about how did the hedge funds and other short sellers escape getting destroyed when they had shorted more than the available stock. So 120% of the available stock shares were shorted. How did they escape, or have they escaped? We'll talk about that. Why didn't the share price keep going up past $1,000 or $10,000? Why didn't it keep going up? Were the short sellers and hedge funds hurt? Did any hedge funds make money? And was it really a battle of the 99% versus the 1%? Okay. And what are the SEC and others going to do about what happened? So these are the main questions we're going to be talking about in this video. Where do things currently stand? How did the hedge funds escape, or did they escape? Why didn't the share price keep going up? Were the short sellers hurt and the hedge funds hurt? Did the hedge funds or short sellers make money? Was it really a battle of the 99% versus the 1%? And what are the SEC and others going to do if there was any shenanigans? Okay, and was there shenanigans? So these are all good questions. We're going to go through all of these in this video. Okay, and of course, I'm not a financial advisor, so nothing I say is financial advice. Always do your own research and so on. Get professional advice. That's not me. I'm not a professional. Okay, so where do things currently stand? That's the first question. Okay, so here we are, and I've put the date and time in where I am now. So it's 7th of February on a Sunday, around about 3:43 p.m, and that's the time in New York at the moment. Okay, so it says like when I start the video, I just did a screenshot of this little date and time to give you context of where I am. Okay, so we're Sunday morning in New York and Sunday afternoon in Australia where I am. Okay, so compared to the high prices here, the share price was relatively flat until middle of January, and then it shot up a bit, and then in late January it went skyrocketing up, and then came back down, and then skyrocketed up again, and then dropped back down, and we're dropped back down to here. It's around about the $63 mark. That's where we're currently trading. So it's gone sky high, all up above the 350. We actually went to 483 and even higher out of market. But that's where we're at the moment, 63.77. Okay, and if you go to the statistics, so in Yahoo Finance, and a link is in the description, we're just on the chart tab, and now I've clicked on the statistics tab, and there's a whole lot of really nice information here. Okay, and we're looking at this area now. This is the part we're interested in for this video. Okay, so let's zoom in on that. And you'll see that there's a float of 46.89 million shares. Okay, and the shares were short. The number of shares short was 61.78 million or 61 million. Okay, and the percentage of shares, the short percent of shares outstanding is 88%. Okay, and the short percent of the float is 226%. Okay, so 2.26 times the number of shares that are available, or the shares that are in the float, have been shorted. Okay, so that's why people got crazy on this stock and started thinking, oh my God, there's no way you can lose. This is a sure thing. People started looking at these statistics here, and even though they're a couple of weeks out of date now, you know, it's still encouraging, isn't it? That if someone's shorted too much of the available stock, more than what's available, how can you lose? And that's what got people into the market. Okay, so these are very interesting statistics, and they should be updated shortly. They should update any day now. They'll be updated with the latest information, and then we'll see how things currently stand. Okay, and the links for all this is in the description. And so a quick summary. So the stocks are massively shorted, well over 120%. News spread quickly, like wildfire, through Reddit and around the internet and through the media and on the news and in newspapers and magazines and you name it. And then there was a feeding frenzy of investors or gamblers who were FOMOing in and buying whatever they could buy, and that's the fear of missing out on a great deal. I can't lose. How can I miss out? People just throwing their money in, And there was an attitude of you only live once, or YOLO. You'll see that mentioned a lot, and get rich quick. So these are the sort of things driving people into the market. Fear of missing out particularly. It's a very strong thing. You've got to be very careful of it. The price rose quickly to $483 and even higher out of market. And then it quickly fell, and we're currently around the $63 mark. Okay, so that's where things currently are. Okay, so that looks like a really good trap, doesn't it? If someone's shorted more than what's available, then if you start buying that item and they can't exit their short positions, then they've got to lose money, don't they? So how did the hedge funds escape? How on earth did the hedge funds escape what seemed to be a sure thing? You couldn't lose. They've shorted more than the available stock. It should have been a sure thing, shouldn't it? And I agree with that thinking. It was a very, very dangerous time for the hedge funds. But did they escape? Let's have a look. So how did the hedge funds and other short sellers escape getting destroyed, completely destroyed, when they shorted more than the available stock? Okay, hedge funds, and the answer to that is that hedge funds have massive funds and resources and information at their fingertips. Massive funds, billions of dollars in funds to trade with. They're very rich, and they got and those who were short continued to trade as the price rose and fell, buying and selling, shorting and longing stock. Okay, so they didn't just sit there like sitting ducks. They continued to trade the whole time, every day, multiple times a day. They were buying and selling, getting in, getting out, and so on, throughout the day and throughout the week. Okay, they don't just buy or short and then sit there and wait for people to pick them off. They continue trading, and they've got teams of people full time, hundreds of people full time, just watching markets, making decisions, buying and selling all day long. Okay, so as the price rose, the hedge funds were still making money, even though they had a big short position, which was costing them money, or some of them did. The ones that were still losing money were still buying and selling throughout the day, and at least mitigating some of their losses. Okay, and so you've got teams of experts in their companies buying and selling and shorting and longing all day long, getting in, getting out, and so on all day long. And what I might do here is show you a quick clip from Bruce's Stock Marketing with Bruce channel. So I'll show you a quick clip, and then we'll come back.
It's possible that the short traders have been buying back the stock. As a matter of fact, I'm certain short traders have been buying back their shares because they've been registering billions of dollars of losses. I mean, of course, the folks at these various hedge funds have been booking huge losses for their company, for their trading entities. Individuals have lost money on shorts. Individuals have made money going long. Individuals have lost money going long, and people have made money and lost money on the options market. That's to be expected in any stock, whether it goes up or down or does this a lot. Yes, that's happened on all stocks. But at the moment, the actual scenario, where are we at really? Are there enough shares out there for the shorters to get all their stock back? No. That's the short of it. That is the short of the final answer. There are not enough shares on the open market to really allow every single short seller to get out. Can short sellers roll over their positions though and reposition themselves? Yes, they can buy back shares at a loss, wait a while, half an hour, a day, a week, whatever they want, and then take new short positions and bet again against the company's shares, not against you and me and GameStop, just the stock price. They're just trying to figure out where can they make a buck. Hedge funds are trying to make money. And if they can short 1 million shares of a stock and buy it back for $1 or less, they make $1 million. If they can get $5 less, they make $5 million. And they'll do that 5 or 10 or 20 or 30 times. And that might pay back a $50 million loss that they had on something else. I mean, this is an ongoing battle. Soldiers, weapons are being reloaded with more money, and they get sent out to battle and fight and try to score a win.
Okay, thank you for that, Bruce. So Bruce got over 45 years of experience as a stockbroker and stock trader, so he really knows what he's talking about. And he says that even when hedge funds go massively short on a stock, they will still keep buying and trading it during the day. And other stocks, they're not just sitting still doing nothing. They're trying to make money on every single price swing. Okay, weapons are being reloaded with more money, and they're sending to battle again and again and again and again through the day. If they can make $1 as prices rise and fall, they'll do that. If they can make 10 cents as the prices rise and fall, they will do that. If they can do it on one stock better than another, they'll move around and do different stocks. There's teams of people, each focusing on particular stocks, working for hedge funds. So they've got unlimited ammunition virtually, and unlimited soldiers to send into battle, and unlimited generals sending these soldiers into battle to do battle. Okay, so they didn't just stand still. So that's how they escaped. That's how they sort of escaped by continuing to trade. They didn't just sit there getting hammered. Okay. So thank you, Bruce, for that. That was very informative, and I highly encourage you to check out Bruce's other videos. The ones where he's doing commentary on the market while the markets are open are like 7 hours long. They're really long videos, and but they've got lots of gold in them. Lots of great information. I was actually trying to find other clips as well where Bruce talked about it, but I'm going through 8 hour long videos, and it's very hard to find the clips I was looking for. So that was a great clip I just showed you, but there's plenty of other information in Bruce's clips as well on this same sort of thing. So please watch Bruce's videos. Check out his videos. Links are in the description. So why didn't the share price keep going up to $1,000 or more, $5,000 or even more? Why not? Okay, so let's talk about that. And from what I can tell, from what I can tell, and I was in a live stream with Bruce. It was about 2 or 3 o'clock in the morning my time. I was watching Bruce overnight. He was working on New York time or Canada time, and he was doing a live stream while the markets were open. And I've been staying awake watching his live streams because they've been so entertaining and informative. And I was there when the Robinhood and Webull shut down the markets. There was lots of people in the stream saying, we can't buy shares in Robinhood. They've restricted trade. They've done it on Webull too, and people were commenting on this as the stream happened. So I was there as it happened, but not in New York, obviously. But when that happened, it just took the wind out of the market, the wind out of the sails. So Robinhood, Webull, and others suspended or restricted buying of GME shares. In some cases, it was restricted. You couldn't buy them at all. In other cases, it was restricted maximum of 5 shares or maximum of 1 share that you could buy at a time. Absolutely crazy. Okay, and that completely destroyed the upwards momentum the shares had. They were skyrocketing up, and then the momentum was destroyed completely. And you'll see it in Bruce's videos if you watch his live streams, especially on a day when that happened. You'll see the market momentum just stalled. The market just stalled completely, and people got scared. And of course, when people get scared, it's only natural they started selling. Completely understandable and natural that they started selling. I would have as well if I was in the market. Okay, and by the time the trading resumed normally, hours later or days later, really, the price was falling rapidly, and or down a long way from where it was, and the share price upwards momentum never recovered. It never recovered. So I really think it was Robinhood and Webull and the other stockbrokers restricting or suspending trading on GME and other short stocks, and that destroyed the momentum of the shares. And I really think that was what killed the upward momentum. You can see it really plain as day in Bruce's live streams. Go and watch them. And I think it was about 2 o'clock or 3 o'clock in the morning. Okay, because I kept thinking, I've got to go to bed now. And then this happened. And then, of course, I couldn't go to bed. I was so busy watching what people were saying and listening to what Bruce was saying. Okay, and yeah, I was on the edge of my seat or on the edge of my bed. I was trying to go to sleep, but I couldn't. I just couldn't stop watching. Oh dear. And why did they do this? So why did Robinhood and Webull restrict or suspend trades? There's a whole lot of reasons come out, and a whole lot of contradictory stuff as well, even from Vlad, the CEO of Robinhood. He contradicted himself, and they seem to be giving issues in these sort of 4 areas, these 4 main areas. They claim liquidity issues. They claim it was issues with their clearinghouses. They were claiming various other systemic issues in the system to do with funds or transfers or timescales or the amount of shorted stock. and all that sort of thing, and conditions changing. So they claimed all these sort of issues in those sort of areas, and they also claimed that they were protecting buyers from what could have been a far worse pump and dump. The price could have gone a lot higher and then fallen a lot more. Okay, so whether it's a mixture of all those four or something else, I just don't know at this stage. Okay, but there were certainly liquidity issues, and there was clearinghouse issues, but whether that was to do with liquidity or not, or solely to do with liquidity, I'm not sure at this stage. There was various other issues. That seems to be a fact as well. And maybe they were trying to protect buyers as well because the price is just going so crazy. And there was stages when the New York Stock Exchange themselves suspended trading on the shares on the way up and on the way down. So they suspended trading because there were so many buyers coming into the market. And when the price was falling, they suspended selling. And in Bruce's live streams, you will see that happen as well. Okay, so I don't think it was the same day as when this happened, but certainly on other days there were suspensions of trading by the New York Stock Exchange. So it wasn't just Robinhood and Webull suspending trading, it was also the New York Stock Exchange. Suspending trading from buying and also suspending trading from selling to try and stop the market going crazy, spiking up massively and then crashing down massively. Okay, the New York Stock Exchange tries to keep the market balanced so things aren't going too crazy too quick. Okay, otherwise people get hurt. Just normal investors like you and I, we don't have a team of people working for us 24 hours a day or whatever. So we're going to get hurt a lot more than a hedge fund or a big trader. Okay, so at least part of that, at least from the New York Stock Exchange perspective, was to protect the market, to stop insane ramps in price up and down, and to make it a bit easier for normal traders to not get massively hurt. And that's I'm included in it. I'm just a normal hacker trader, just fumbling around in the dark. Really, compared to the hedge funds, which have teams of people, I'm just fumbling around in the dark with my shares. Okay, and so the New York Stock Exchange did move to protect us, and also Robinhood and Webull did suspend trading and restrict buying, and they had a range of issues. There may be others, and part of the reasons was they say to protect buyers, but whether which of those is true and how much is still to be determined. Okay, so that's an ongoing investigation. So did hedge funds make money during all of this? Okay, let's have a look at that. And yes, absolutely some did. Some made billions of profits from selling their GME. So as the price rose, hedge funds were selling their GME. Others were buying it, others were shorting it, others were longing it. They were taking all different positions on it. And some made absolutely billions in profit from selling their GME. They bought low, and then they sold when the price went up. Over $400, sell. And the top holders and the top mutual funds that own GameStop shares are listed right on GameStop's website. GameStop has got a brilliant website. All of the SEC filings are there. The top owners are there. So much information's on their website, and it's an excellent website. Truly is very informative. Okay, and here's the information from their website. So here's the ownership summary. So these are the top holders of GameStop shares, and you'll see they're all great big funds. Okay, and the top mutual funds that are holders. Okay, so this Fidelity Management own 9 million shares. RC Ventures LLC own 9 million shares. This mutual fund here owns 6.8 million shares. Okay, so when the price went sky high, these funds were selling. So they made an absolute fortune. Okay, and so some hedge funds made a lot of money during the GameStop price hike, and of course the ones that were short lost a lot of money. Okay, but not all of them lost money. A lot of them made a lot of money. Thank you very much. And this is some of the ones that made money. I'm not saying all of them sold, or all of them sold all of the stock they owned of GameStop, but certainly they were selling some of their stock and making a very nice profit. Thank you very much. Were the short sellers, the hedge funds and others, were they hurt? Another good question. And yes, they were. for example, and Bruce agrees in Bruce's stock markets with Bruce. He confirms that they lost tens of billions of dollars, and Melbourne Capital alone lost many billions, and they required a 2.75 billion bailout from Citadel and Point72 in exchange for a non-controlling revenue share. Okay, so Melbourne Capital was bailed out by these two companies, or these two funds, but it wasn't for free. It wasn't just there's some money there you go to help you. It was they got a non-controlling revenue share of the fund. So as this fund recovers and trades back up again, Citadel and Point72 will do very nicely out of the price increase. But Melbourne Capital was hurt, Citadel was hurt, Point72 was hurt, and many other hedge funds and short sellers were hurt. They lost tens of billions of dollars. There's no disputing that. Okay, and there are many billions of other losses from those who were short on GameStop. So that's not under dispute here. They lost a lot of money. Okay, and if you were short on GameStop during what's just happened, you lost a lot of money, and or paid a lot of fees in interest and things. And there's links in the description for more information about this if you want to read more. So was it really a battle of the 99% against the 1%? Was that really the case? Okay. And no, it wasn't. Massively rich hedge funds and mutual funds that own GameStop, and they sold when the price went up, and they made a fortune. Okay. So it was never a battle about the 99% against the 1%. That was just smoke and mirrors, the people that were claiming that. It was never about that. The hedge funds and mutual funds made a fortune out of GameStop going exponential. Okay, so, and besides all that, the hedge funds and mutual funds contain superannuation, savings, investments of hundreds of millions of normal, everyday working people. Okay, so then they're not the 1%. These people aren't the 1%. These are part of the 99%. Okay, so so the funds may be rich, but most of the people who invest in them are just normal, hard-working, everyday people. Yes, there are hedge funds and mutual funds restricted for the wealthy. I'm not talking about those. I'm just talking about the general hedge funds and general mutual funds that anybody can invest in. Okay, you can invest $10 in it if you want to. You can pay $10 a week or $5 a week or whatever, $10 a month, whatever you can afford. Okay, so hundreds of millions of normal, everyday people, hard-working people are invested in those funds. So if these funds lost money, then normal, everyday, hard-working people would have lost their pensions or their savings. Okay, so it was never, ever, ever about the 99% against the 1%, and never, ever, ever. The people who were saying that were scammers trying to get people into the market. It was a blatant lie told to people to push their buttons and get them emotionally involved. So they parted with their money and bought, so that the price went up, so that the people saying these lies could cash out and make money. That's what it was all about. The scammers made a lot of money out of pushing people's buttons, as they do in every scam. Yep. Sad but true. The truth hurts, doesn't it? Okay. So what are the SEC and others going to do? Is action going to be taken? Okay. So are the SEC investigating? And yes, they most certainly are. So they're investigating various avenues. We've got a quote there from Alexandria Ocasio-Cortez, and this is unacceptable. We need to know more about Robinhood's decision to block retail investors from purchasing stock, while hedge funds are freely available to trade stock as they see fit. And that's very true. We need to get to the bottom of that. Exactly what went on there. Was there shenanigans, which many people suspect, and I suspected as well? Okay. There was those 4 reasons we looked at on a prior slide there, but I think there might have also been some shenanigans involved, and I suspect it. And the other side of politics, so the Democrats and the Republicans are in unison, fully agree. Okay, so the SEC is investigating. They're investigating Robinhood and Webull and so on. They're also investigating what's happened on Reddit with these pumping these people getting together and coordinating and pumping prices and pushing buttons of people to get other people involved. So the SEC are investigating that as well. And So they're investigating a lot of things. There's going to be chapters of textbooks about this in the future, and research papers written about it. It's been such an interesting time. And I've got links in the description for those if you want. Will anything come of these investigations? Will action be taken? Or we'll have to wait and see, won't we? I'm a little bit sceptical, to be honest. But will anything happen? We'll have to wait and see. And the one bit of good news for people that bought in, when the price is over $200 and haven't sold yet, the good news is that GameStop is reinventing themselves. It's not over yet. GameStop are reinventing themselves. So they're transitioning from bricks and mortar to an online company. They're hiring experienced people from Chewy and Amazon and so on. It's entirely possible that GameStop have a very bright future ahead of them. They're not the $10 or $20 share company anymore. They've gone way beyond that. They've had hundreds of millions of dollars worth of free advertising. So everybody knows who GameStop is now. So that's a big thing. And the share price could easily go to $100 plus a share, or a whole lot more. Okay, and stay there, not come down again. It's never going to be $4 again, I don't think. Okay, so if you are out of pocket, if you bought in at $200 or $300 or $400 or more, and you're still holding the shares, don't give up hope. If you can afford to hang on, hang on. If you can improve your position, do so. Get financial advice. But my advice is don't give up and just sell them for a huge loss. Get financial advice first, okay, from a professional. And $50 or $100 well spent on financial advice is money well spent. Okay, and see what they say. They'll help you work out the best way forward. Okay, but the company's not the same as they were, and they seem to have a very bright future. So who knows what could happen. Okay, and disclosure in conclusion. So just a full disclosure, how much GME do I own? And I've never owned any GME shares. So I currently own 0. I missed the boat. Okay, I was very, 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 very close to FOMOing into the feeding frenzy as the market was going up. But by the time I transferred money to my stock account and waited for the 3 days for it to clear, God, that was a frustrating 3 days, then the share prices were already well over $100 plus. Okay, and there was no way I was going in then, because 3 or 4 months before it was $4 or $5. There's no way I'm going in when the stock price has already gone crazy. So, oops, sorry. So I missed the boat, and I kept thinking about what the Wolf of Wall Street says. He says, get in at the end of the beginning, and get out at the beginning of the end. And for me, by the time the share price was over $100, it felt like it was well and truly past the end of the beginning. And it wasn't the end yet, but it felt like it was well and truly past the beginning of the end of the beginning. So the share price is already going up, and when it's going up steep, you don't want to be buying up here. You want to be buying as it's rising. When it first turns and starts rising, that's when you want to try and time it in that first bit, not the last bit. Okay, assuming I'm just pretending there's a graph here on the screen that goes like that. Okay, and so there's no way I was going in then when it was already gone 30 times or more, probably 50 times by the time I got in and got my money clear. And it was too late then. I just felt like the party was ending. And a quick disclaimer, nothing what I've said is financial advice, and I'm not a financial advisor. All I'm trying to do is help people come to terms with what's happened, understand what's happened, and if you are neck deep in debt because of this, please don't lose hope. Okay? Talk to a financial advisor, work out the best way forward for you, and don't just sell everything for a massive loss. Talk to a financial advisor first. Okay, an accountant, a financial advisor, a stockbroker, and they'll help you work out the best way forward. Okay, good luck to you. Good luck to everybody, and hope this video is useful. Thanks for watching.